This is my weekly journal entry where I review what happened in the markets for the second trading week of March 2025 and my own actions and activity in the markets with a view to determine if there were any good habits I should continue, anything that I now know in hindsight that could help me make better trading decisions going forward. So, over the course of the next few minutes, I'll be looking at my trades, how they panned out, what I knew or what I thought at the time when I was taking the trades, what I now think after those trades have played out, and if there were any missed trading opportunities and what I think about them if they will necessitate a modification of my roles as they currently are. So this week followed the huge monster week that was the first week of March 2025. This was that first week's candle we can see over here. Now, this week did something rather interesting. It continued that bullish momentum. Now, this is euro dollar. It continued that bullish momentum, took out this weekly high, just about tapped into this monthly fair value gap, is visible on the monthly time frame, and then rejected. Still closed bullishly, but in the bottom half of that candle's range. The corresponding GBP USD candle did not have that much bullishness to it. We can see that it's pretty much a doji that's went neither here nor there, which completed the formation of this weekly fair value gap, which will become relevant as we go forward in the trading month. And for the third and final assets that I trade on the New Zealand dollar, we're still in this bit of consolidatory price action with an upward tilt. And this was the candle. This one closed much stronger, much more bullishly than euro and pound for the week. This week I had two trades. I took two trades, opened two positions, both of which were losses. However, my setup, my rules, as it were, my trading system delivered about, well, depending on how you look at it, right? Two or three trading opportunities, um, just from a technical perspective. Now, as I review the week, I'll go into the reasons that I did not take these trades that would have been winners now in hindsight, and to see if going forward I would want to take those trades. So the two losses that I took were a New Zealand dollar US dollar short on Tuesday and a euro US dollar buy on Thursday before PPI. If we go down to the lower time frame, the 4 hour time frame, this is where my trade ideas are framed, and then my execution time frame is the 15-minute time frame. So this is what I'm looking at. This was Tuesday. Now, Monday's price action, we'll review Monday's price action, but it was following the huge bullishness, and I did not have any trading opportunities on Monday that I took anyway. But when I go into the trades that I potentially missed, we will see how Monday presented some, you know, presented a scenario where my technical parameters played out without giving me an opportunity to enter the trade. Now, this was the first trade I took on Tuesday. We can see here that this 4 hour fair value gap formed on Monday, that was the 10th, and then Tuesday traded into that fair value gap. Of course, you know that for me to open a position, it is not enough for a fair value gap to form and to be traded into. I want to see a time based liquidity sweep going into that level. This was what that looked like on Tuesday. So this was Tuesday's candle. Now, the 4 hour fair value gap had formed here, and we can see that the open of Asia range kill zone created this buy side liquidity beautifully. Now, what happened was that during London session that same day, price traded bullishly, took out Asia highs for the day. And all I was waiting for was a bearish engulfing candle or a shooting star candle, as it were. That is this candle right here that you see. That is the shooting star candle. And so, as soon as I saw this signal after this liquidity had been taken and price traded into this 4 hour fair value gap, I executed my short. Now, there was no material news that I needed to be wary of, and so there was no problem with the timing of the execution of the trade. I took the short position here, put my stop above the high, I can see that within 15, 30, 45 minutes, I was taken out of the trade for a loss. After I got taken out for the loss, another engulfing printed and price continued to trade lower, ultimately yielding about, let's say, maybe a 1 is to 1 R, maybe not even as much as a 1 is to 1 R, because this would have been the entry, the stop would have gone here, and then price only traded as far as this. So a 1 is to 0.8 R, and even that ultimately ended up losing again. So we can see that the reason you don't enter trades, now I'm talking to myself just as much as I'm talking to anybody who is watching this, is the reason that if you lose a trade idea, you don't chase that trade idea, is that if price indeed wanted to trade all the way down, this initial entry should have worked out. If for any reason this entry didn't work out, I'm no longer interested in whatever that trade does. Now, it may very well be the case that it will actually continue and play out. Does not mean there was a trade opportunity for me, because the criteria that need to be met for me to enter a trade were met and they did not play out then. So adjusting my system to account for moments like this where maybe I get stopped out and then it goes into profit with the amount of data that I have would not be wise for me to do. So this is a 3 hour trade that did not pan out, and that was my first loss for the week. Now, Wednesday was CPI, and so as a matter of principle, I don't trade when CPI Wednesdays, I don't trade FOMC Wednesdays, I don't trade NFP Fridays, and I don't trade PMI Fridays. PMI is the Euro PMI with the French, German, flash manufacturing PMI, pound, and then dollar PMI in the afternoon. There's just too many economic news releases on those Fridays that I've decided I want to stay out of the market of those days. So those are the 4 major trading days in the month that I don't touch the markets. Now, the next trade that I took, which was also a loss, was Thursday before PMI and before PPI rather, and this was the trade. Now, again, this was the framing of the trade. 4 hour fair value gap visible right here. This was the 4 hour fair value gap, and it's always, again, like I always say, what I want to see is I want to see a low taken out as price trades into the 4 hour fair value gap. And so the 4 hour fair value gap was printed here. This 4 hour low was created. That's exactly what I want to see. Price took it out during London kill zone on Thursday, then gave me the entry signal, but ultimately took me out for a loss. Let's go down to the 15-minute time frame to see what that price action looked like. So this was Thursday. This was Wednesday's price action after CPI. CPI created this low, and so on Thursday, this was Asia range for the day. London session, Asian range had been taken out, and then it took out CPI's low inside of the 4 hour fair value gap. Now, you can see that price initially wanted to start trading bullishly, but London kill zone had not yet had not yet opened, and so I did not take the trade just yet. Now, when London kill zone opened here, right here on this first 15-minute candle, this candle engulfed the previous candle, and the liquidity rate had already happened. So this was my entry. This was where I traded. I entered the position here. My stop went here, and then you can see that I immediately got taken out for a loss. Now, this was a rather painful trade, trades where you enter and immediately it takes you out for a loss. It's like the market just said no. And they're good because you're in and out of the trade almost instantly and you can move on to other things. It's much worse now. It's arguable whether it's a worse feeling where the trade moves a bit into profit, maybe 1 hour, maybe 1.5 hour, and then reverses. But this was instant feedback. Now, somewhere along the lines, I was looking at this as well. That's why the position tool started here. I was like, okay, maybe my entry was too early. Maybe this candle, was just the start of the kill zone. And so, what would have happened if I had waited a little bit for this to happen, for this candle to engulf this one, and then gone long here with my stop below the low? You can see that immediately on the next candle, that low got taken out, but it still went ahead to close bullishly. Not that any of that ultimately mattered in the end, because price just traded downwards and took you out, would have taken you out ahead of PPI. And so there was nothing wrong with my initial entry. If price indeed wanted to trade higher, there's no reason that it should not have done so on this first engulfing candle. Those were the two trades that I took this week that turned out to unfortunately be losses. Now I want to review what else happened during the week that I was not involved in, and for the purpose of study to see if there's anything there. The first was Monday. Now, this was Monday's price action. This 4 hour, let's go to the 4 hour. Let's go to the 4 hour, since that is always where the fair value gaps are filled. Now, this was Monday's price action, as you can see. This was the 4 hour fair value gap that had formed on Thursday the previous week. Now, on top of that 4 hour fair value gap, there was this 4 hourly low that had formed. Exactly what I want to see. I want to see a time based liquidity point taken out. Now, if you check, you'll see that this was Friday's low taken out as price trades into the point of interest for me to take a long. Now, there are two reasons I did not take this long. The first is, as you can see, I try to avoid taking trades near the top of a trading range. What do I mean by that? Look at all of this price action. This was the price action from the previous week with multiple fair value gaps, one here, one here, one here, and one here. Multiple fair value gaps that had been left unmitigated. Now, if you are taking a trade near the top of the range, you do not know whether it is the beginning of a pullback. Because ideally, what I wanted to see now, you can see that a daily fair value gap had formed here. And one of my rules is that if there is a lower time frame fair value gap sitting on top of a higher time frame fair value gap, often the lower time frame fair value gap that is sitting on top, now this is in a bullish scenario, will get disrespected as the larger liquidity pool that price will be aiming for is in the higher time frame fair value gap sitting below price. And so the reason that I avoided this setup, the reason that I stayed out of this trade was that I was looking at this daily fair value gap as a potential area for price to trade back into. I did not want to be buying near the top of this range when the pullback would potentially begin. And you can see that that I was this was the liquidity pool that I was anticipating price to take out for me to enter into the trade. So when this one got taken out and traded into this relatively small 4 hour fair value gap ahead on top of this large daily fair value gap with another 4 hour fair value gap nested inside, I wasn't really interested. Now, of course, that's my trader's intuition, which from experience I arrived at. In this case, it hurt me because it made me miss out on the trading opportunity. But that's not the only reason I did not take this trade. Second reason is that I pretty much could not take it. What do I mean by that? So this was Monday's price action. This was Friday's low. On Monday, Asia range didn't really create any material lows apart from maybe this one. But then you can see that when London rolled around, price traded lower, took this one out, tapped into the 4 hourly fair value gap. Now, what do we see here? The 15-minute time frame is my entry time frame. You can see that this first candle, not only did it not engulf the previous one, at this point, price had not even tapped into the level yet. So this low got taken out. And then price tapped into it, took out this low, tapped into the 4 hour fair value gap properly. But what do we see? No engulfing candle was printed. The candle that followed was an inside bar, neither taking out the previous candle's low nor the previous low, nor its high. It also did not engulf it. And so this is not an entry signal. The candle that would have been the entry signal, unfortunately, was this huge candle with that large range. And by this time, there is no way for me to enter the trade anymore because the trade had left me. Now, sometimes I would blend two candles where this candle and this candle on the 30 minutes time frame would look like a hammer candle. But on the 30 minute candle, these two candles were not framed together. It was this candle and this candle. So if I go to the 30 minute candle, you see what I'm talking about. On the 30 minutes time frame, this was what that candle looked like. You can see that the first 30-minute candle was this one, did not give an entry, strong bearish candle. If this candle had looked like this, then it might have presented me with an entry opportunity, because this is the kind of candle I'm talking about. This is the hammer candle I'm talking about. Trades lower, then rejects and closes in the top third of the candle. But you can see that the only 30-minute candle was this one, and by this time the trade idea had played out, because I target 3R that is no more than the opposing liquidity, Asia range liquidity. And so that trade idea pretty much did not give me an opportunity to enter, even if I wanted to be reckless and trade from this level, although I could see this level right here. And so Monday did not really present me with a trading opportunity. The next trading opportunity that I was unable to capitalize on was Wednesday ahead of CPI. And like I already mentioned, the reason that I can't take a profitable or a profitable trade, or a losing trade for that matter, on CPI Wednesday is that I do not trade CPI days. And so this was it. Another beautiful example of my trading system. Let's go to the 4 hour to see the trade idea. This was the trade idea was present both on the pound and on the euro dollar, but the pound was the clearer trade. Now, this was the level, this was the start of the 4 hour fair value gap. This low was the 4 hourly swing point that I wanted to see taken out. And when we go down to the lower time frame, we'll see the time-based liquidity that was swept. So the low that was swept was the previous day's New York low was taken out. Asia lows were also taken out. And so this was the trade. You can see that right here, price took it out. This candle took out the previous candle's low, then closed near the top of the range. Now this was a hammer candle on the higher time frame. So as soon as this happened, this would have been the trade idea. This would have been the trade entry. You go long here, stop goes below this low, and then targeting 3R. Of course, you can see that 3R was hit. Not easily, because you can see that as price moved a bit in my favor, well, what would have been my favor, it's traded all the way back down into drawdown. I would have had to hold this trade, then watch it come back up, then watch it do this, then watch it come all the way this close to the target, then watch it do all of this, consolidating before eventually at the start of New York kill zone, price traded to the target. Now, what can we see? Shortly after, there was CPI, and then CPI, if I had held through CPI, what would have yielded 7.45% R, but of course, that's wishful thinking. There's no way I would have been in that trade for this. Now, the reason that I don't take trades on CPI, and although now it seems like I missed out on what would have been a profitable trade, there is every possibility that ahead of CPI, instead of you to have this bullish impulse, what you would see is that this bit of consolidation, instead of price moving this much before beginning to consolidate, might easily have started immediately after you enter the trade, and price will just consolidate and consolidate and consolidate and consolidate. That is, if it doesn't even take you out ahead of CPI. And the problem is at this point, this candle right before CPI. Imagine if the price was trading somewhere here. You don't want the exposure. You don't want to be in the trade ahead of CPI, right? And so that's the reason that you just avoid CPI altogether, because you have no idea what price is going to do before CPI. And so I followed my rules and missed out on what would have been a profitable trade. It's not for so much that I'm going to change it, because I know that although that will save me from a profitable trade this time around, it saves me from many more losing trades over time. The final trade that I missed out on was, and now this is the only one I'm really debating. Here's what I'm talking about. This same fair value gap. Now I know from my trading that a fair value gap can be tested and used multiple times, especially the higher time frame ones, daily, 4 hourly. The only thing that is important is that there be a liquidity sweep as price trades into the level. And so this was what happened. This CPI trade, of course, did not give me an opportunity, so there was no trade here. But this low had now been created inside the 4-hour fair value gap. What do we also see? On Thursday, PMI, PPI rather, created this low, right? And so this is what happened. On Friday morning, price took out Asia lows and started trading bearishly. Then it took out PPI low. But we can see that still inside that 4-hourly fair value gap and right not that far away. How many pips was what was the range? How many pips away was it? Just 7 pips below. There was another low that had been created. It has happened to me before where price takes out this initial low, gives me an entry as it did here. We'll discuss that in a moment. And I will go long for price to just keep trading lower, take me out of the position because it wanted to take this low out as well. Remember that low is also still inside the fair value gap. Then trade bullishly from there for what would have been the profitable trade idea. I have not seen either scenario happen substantially more times than the other for me to make a trading decision. And so every time this sort of thing happens, I'm still always conflicted because sometimes I'll take the trade to lose. Sometimes I'll wait and it will pan out. Sometimes I'll wait for even this one to be taken out and it will lose. And so there's so much variability with this particular type of situation that I'm still trying to determine what it is I want to do. Maybe ultimately maybe ultimately I will just go ahead with the trading opportunity. I'll just go ahead with taking the trade whenever it presents itself so that um, whatever happens, happens. And so this was the trade idea. Price took out this previous low and then printed this hammer candle. You can see traded bearishly for a bit, then traded bullishly, closed at the top of the candles range. This would have been entry, go long here, stop goes below this low, and then what do we see happened here? This trade would have actually put me through the ringer because price immediately shot up in my favor and came as far as 2R. Now I've just been waiting for 1 hour for my 3 hour target to be hit. 3 hour coincided nicely with this high. And so while I would have been waiting for that, you can imagine for a setup that I wasn't convinced about in the first place, price traded all the way back down into about 75-80% drawdown and was very close to taking me out. But then all of a sudden, poof, this candle printed, brought me back out of drawdown, then started consolidating for a bit. Now, this candle that closed bullishly, that ultimately took the trade closer to the profit target, did not open out like this. You can see it has this really long way to the downside where it came back and tested the entry again, ultimately rejecting violently, closing bullishly, and then on the next candle, even before New York, price took out the target. Now, of course, when that sort of thing happens on Friday, you can just expect pretty much a consolidation during New York, which is what we see happened here. And then price just eventually, what do we see? Came all the way back down like I had been anticipating. Then took out that liquidity that I had been anticipating. But of course, it did it. London closed kill zone on Friday. So although this might have looked like an entry, price traded away, but there was no really trading. There was really no trading opportunity here. And so this is the reason that trade setups like these are iffy and I still don't take them. I will vary my decision making some depending on how my gut feeling. Maybe if I'm up on the week and I don't want to risk losing my profit, so if I'm down on the week and I want to see if I can make some money, whatever it is. But I know that it fits my criteria in that there was a liquidity sweep, price tapped into the higher time frame level, then gave me my entry candle. The only variable is that there is another low that is close by, and I don't know how to deal with that just yet. And so I did not take this trade. That was the result. We'll see what next week has to hold.